Hi guys. I want to talk about the psychology behind the trading that we took last week and the losses we took last week. So this is my view as of last week. I was looking at this as a head, a shoulder, and another shoulder for a continuation to the upside. Actually, this looked like a correction for a continuation to the upside. So that was my thought, and the monthly time frame actually gave us a bullish engulfing candlestick pattern, which actually confirmed my bias on the monthly time frame. So when I come back to my weekly time frame, I was looking forward to because I was looking at this as a head, a left shoulder, and a right shoulder. This is a consolidation around this area, consolidation around this area, then a push up for a continuation to the upside because this shoulder level has been broken. But I did not realize that this is not a proper break. This is an indecision candle. It's not a proper close. It's not a proper break. But monthly time frame was kind of giving me a bullish momentum as of that time. So I was expecting a pull back to this region for a continuation to the upside. But eventually the market just came back and break down below the minor support, and the major support level. So that's what I was looking at. So although I did not take the trade, we did not take this trade, but I was expecting the market is going to continue to the upside. So the lesson that I learned from this level around this region is once we have a break above of the shoulder level, we should wait for a retest of the shoulder level for a continuation to the upside. So it has to retest this area, a proper break above, a proper break above, and a retest for a continuation to the upside. So when we come back, initially I was looking at this as a head, a left shoulder, and a right shoulder. However, this neckline was broken at this area. So that was why I was on a bullish monthly engulfing candlestick pattern. So that's why I was considering a buy on this Euro GDP. But it seems like price has respected the head, the left shoulder, and the right shoulder. This week, I'm going to be posting a new video and see how we're going to take advantage of this bearish momentum that is coming because this is a weekly head, left shoulder, and a right shoulder. So when we come back to our daily time frame, this was what I was looking at on the daily time frame. We have a push, we have a significant push towards the upside around this region, I think. We have a push towards the upside, then we have a correction, a candlestick that is falling. Actually, I think I took a loss around this area. That's a personal trade. I took a loss around this area because I was expecting maybe a little bit of more consolidation to the upside before the continuation to the downside. Although this is an impulsive trade in this area, this is an impulsive trade. So the next bet that I'm going to be checking is BTC. BTC, we were just looking at the trade. We did not take the trade as well because BTC is actually consolidating. This is a consolidation. When we come back to our monthly time frame, this is what we were looking at. We have a push, we have a correction, we have a push, we have a correction, we have a push, and this is looking like a correction. So when we come back to our weekly time frame, what am I looking at as the weekly time frame? I was expecting that this this is actually a correction that is going to be looking like this if we're going to be expecting a continuation to the upside. So I was not interested in BTC because I was looking for a correction like this, a correction like this. I did not choose BTC. I did not choose to place a trade on BTC because the initial correction has to be tradable. If you look at this correction, it's kind of not tradable. That is why I did not take a trade on BTC. So this correction is going to look like this as well. If it's going to continue to the downside, or this correction is going to look like this to form a base around this region for continuation to the upside. So that's my take on BTC. I did not take a trade on BTC. I'm just watching and looking at what the market is doing and presently the market is actually consolidating. If you look at this pair, there is nothing to trade around this region. It's confused. It's going up and down. It's just going to stress you while you are in the trade. Then the next pair that I'm going to be checking is Euro USD and the XY. So Euro USD on the monthly time frame, I think I was in this trade, which is my bad. I think this was lack of belief. I was in this trade. I went out of this trade. Um, I saw Euro USD as double top around this area that pushed the market downwards. I saw a significant correction around this region. I saw a push towards the downside, and I saw this consolidation. This was actually looking like a consolidation to me as of last week, which was correct. So the next level target for BTC is this green bar, this major zone around this area. So as of last week, we were looking at BTC to drop. We're looking at BTC to drop. So BTC was around this region, around this weekly consolidation around this area. So in my rule, there's a rules that states that once you see a small candle like this and the daily time frame confirm the bias, we have a correction like this, then the market is going to fall for a continuation to the downside. So I was in this trade. I went out of this trade maybe due to panic around this area. We took a profit around this area and we went out, maybe thinking that this is going to be a double bottom. But I was supposed to hold my trade, which is a lack of belief. So, and the market pushed down significantly, and we are currently at this level as of the moment. So from the lesson that I've learned in this one is you have to believe in your analysis, you have to believe in yourself more. You have to believe in yourself, even if it seems like the trade is going against you, you have to believe in yourself. Wait for your stop loss to get hit. I think that's the lesson that I learned in this one. Then the next pair that I'm going to be looking at is GDP JPY. GDP JPY, I was looking at this. Look at what I was looking at as of last week. I was looking at this like this is a triple bottom around this area. We have a correction, we have a push, we have a correction around this area. There are two levels that this market is supposed to reject from. We have this level around this region, which is the wick of the candle and the candle close. It can easily reverse either from the wick of the candle or the candle close. But I was eager that the market is going to reject from the candle close because this push was quite significant. And this indecision candle around this area was not enough. It's not a good correction for continuation to the upside. So that was why I was expecting a more sell around this region. But I fail to understand that there is a trend line running from this level to this level around this region. So this trend line is the one that held this market around this region. And this is now looking like a third touch of the trend line for a continuation to the upside. Then the third touch of the trend line also matches with the wick of the candle on the monthly time frame. So that is why the market play out. But my thought as of last week was like, okay, this is a bearish engulfing candlestick pattern, and we have a significant correction. I think a triple top here on the daily time frame. Then this is now looking like a correction because the last week candle rejected back significantly back into the neckline around this area. So when we come back to our daily time frame, you see what I'm saying clearly. So last week candle rejected back significantly into the trend line. So I was expecting that this correction is also looking like this correction for a continuation to the downside. But the market came back and corrected significantly around this region. Then we have a push towards the upside. So initially I was telling myself that as long as the market is still below this level, I'm not going to be taking a trade for a buy. So I was looking for a sell around this area, which my bias is still true. It has to be a break above this area before I'm going to be looking for a continuation to the upside, because this market can easily come back down, reject. So I took a trade around here. I think I took a loss around this region. I was looking for a sell. So the candle wick tagged me in for our time frame, I think. So I went out for a small loss. So I think the candle wick tagged me in around this region, around this area for a sell, and the market pushed back up. So some things like this happen in the market. So we just reanalyze and see what the market is going to do next. However, my forecast for this week is that the market price has to break around this area, which it has retested before, because it can easily come here and give us a double top for a continuation to the downside. Because if you come on the monthly time frame, I still think this indecision candle on the monthly time frame, it can push the market upward, but I still feel like it's kind of not correct. There is still more to go around this area. Maybe every test of this place will be nice to see, but if the market chooses to go up, then it's fine. We're going to take the trade once we have a break above of that rail. Once we have a break above of this rail, then we're going to take the trade for a continuation to the upside. The next pair that I'm going to be checking is what oil did. Oil as well, oil is looking good as well. We took a trade around this area, but we closed around this region because oil was looking like too bullish, maybe because of the war. This oil was looking too bullish, maybe because of the war. So we took the trade. For this region, we went out around this area, but the market pushed up significantly, which I did not expect. The war was the cause of this. So what I was looking at is a double bottom around this area. That's my thought as of last week, which was actually accurate. Then we have a push, we have a significant correction. You know that we took a little bit of another here around this region because this was a double top and this is a retest around this area. So we have a push, then the price corrected significantly around this area. Then we have a significant push to the upside for continuation to the upside. So we took a trade around this area. We were profitable and we went out pretty much early on this trade. So which is also lack of belief as well. So what we're going to be looking out for oil next week is we're going to be waiting for a pullback, then for a continuation to the upside. The next pair that I'm going to be checking is what we have on AUD New Zealand, and the next one is going to be the XY. AUD New Zealand. What are we looking on AUD New Zealand? We have a push, we have a correction, we have a push. We took a trade around this area and we're riding it to the upside. But however, this is actually approaching the major zone region around this area. So I'll not be interested in taking the trade. I'll not be interested in taking the trade around this area. I will not be interested in taking the trade around this area. Then we're going to have a daily time frame. What the price is doing on the daily time frame, because we are almost approaching the major zone around this area. So there's nothing to trade around this area. There's nothing here. Let's just allow the market to see what the market is going to do. When we have a break above, then we can be interested in the trade, but the market might most likely consolidate around this area. So the next pair we're going to be looking at is the XY. The XY is looking, we are looking at this area, around this area. We are looking at this as, my thought was like this. This was a double top because the market was at this area. This was a double top around this area. because there's a significant correction around this area. We have 1 day, 2 day, 3 day, 4 day, 5 day, 6 daily candles around this area. This was looking like a double top to me. But however, if you check significantly, this double top was looking corrective as well. So it's kind of deceptive. That was why, it's the market is, you have to really believe in what you're doing. We have a significant push towards the upside. And when you see this kind of candle, once you see a break above and a candle close like this, you will not be interested in taking this trade anymore. Why? Because you'll be thinking maybe there might be a little bit of a correction for a continuation to the upside. So after this candle, we have another push towards the upside, and we have a significant push towards the upside. That was my thought on DXY. So we're right about this trade. But what are we going to be looking at next is I'll be posting again on Tuesday, but my thought as of last week was actually this area. Because in it, and from my experience so far, is if you see several daily candles around this area, like 6 daily candles around it, most likely that market wants to reverse. But in this case, we have a kind of a correction for continuation to the upside at this key level. So that is what played out as of last week. So that's my thought and my psychology behind the trade that we took last week. So I'm going to be posting a new video on what we're going to be looking at in the market this week.